HSBC, a prominent global bank, reported a significant rise in its third-quarter profits, indicating a strong recovery from the impacts of the global pandemic. However, these impressive financial figures still did not meet the ambitious predictions set by market analysts. As per the bank's release, the profit before tax amounted to $5.4 billion, representing a remarkable uptick compared to the previous year. Nevertheless, the market had set its sights even higher, anticipating the figure to reach around $5.5 billion. This minor shortfall has triggered a wave of discussions among investors and analysts, emphasizing the bank's need to ensure consistent growth and meet market forecasts in the subsequent quarters. While HSBC's resilience and performance are commendable in the current economic climate, the disparity between actual results and market expectations underlines the constant pressure global banking giants face from ever-evolving market perspectives and predictions.